markets have been largely range-bound other than the Hang Seng and the Taiwan index.
The 40 hourly has moved higher.
Market cap is going to be close to 10,000 crores.
25,915 is the first rate.
I think we are seeing some very big IPOs in the pipeline.
We want to make sure that long term we have trust with the customers.
And core inflation today is at its lowest level.
Planning to raise around $3 billion in the IPO.
For now, the Nifty is absolutely choppy. This is something that we were expecting as well.
The global funds don't, frankly, look at India. They will start looking at now.
We want to be a $2 billion company.
Markets are absolutely where they were in the morning.
Sharpest strategies, top market trends, unmatched perspectives, the trading day's most comprehensive roundup. Stay ahead with NSE Closing Bell, broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Well, that is the day so far, and it's an absolutely flat day so far. But, you know, the point is we are flat after recovering quite a bit from the day's lowest point. The low was made around 12:30 in the afternoon, and from there we picked up quite a bit. This is Closing Bell. We're coming to you live from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Surabhi and Nigel. Guys, good afternoon.
Hi, good afternoon. And there's been some consolidation in global markets as well, because some of the Asian markets were around the flat line. Even the Chinese markets that have been euphoric since the central bank announcements over there, even they cooled off a bit. There's a little bit of red on US futures. So I think maybe just taking a bit of a breather, markets around the world.
Well, that's right. And we were down 50 points, around 90 minutes or so ago. But the Nifty Bank, that's made its way back into the green. And Reliance and ITC, both those two heavyweights, they've made a bit of a comeback. So that explains why at least we're trading around the flat line.
Absolutely. And, it's flat is good, better than being down, right? 40, 50 points. It's that kind of a day where not very much is happening. But I have to say that broader markets are weak. And I think that is something which has been there from the morning, actually, after the first hour or so. So off the lows of the day, Nifty Bank, by the way, is the other one. That's doing much better. It's a slow drift higher for the Bank Nifty. The three areas sectorally which are under pressure, IT. So news flow around IT, starting with that Wall Street Journal article about entry-level IT jobs, in the US looking extremely tough out there. That was a fortnight ago, and IT stocks generally have been very weak. Now, of course, earnings season will kick off not very far from now. Consumer is another pack which is down, and PSU banks as a pack is also slightly lower. And as I said, broader markets, mid-cap index is the one which is down about 0.8% the last I checked. And I don't think there's very much by way of a recovery which is kicked in there. So, and as a result of which, market breadth is about 2.5, 3:1 in favor of what is down. Surabhi.
Okay, if we talk about the individual constituents of today's move, what is up? Definitely power stocks, because of the kind of targets being put out and the capacity addition that will happen in India, and the new regulatory push as well on this. We'll tell you more about it as we go along. But Power Grid, NTPC, these are among the best performers on the Nifty today, and almost a 4% gain on Power Grid. Now NTPC is pushing a gain of about 1.5%. Then you have a couple of the private sector banking names, and like Nigel was saying, they are really preventing a wider decline on the Nifty. And I can name a couple of them: ICICI Bank, HDFC Bank, and even Axis. Last I checked, even Axis up about 1.5%. So they're ensuring that we don't have a wider collapse. And Reliance, at least for what it's worth, is at that flat line. Pull up Reliance's chart. So these are banks which are doing better now in the second half than how we opened out. And Reliance, pushed towards the positive side, but now there's some volatility setting back in. So let's see how it goes. On the flip side, IT seeing a fair amount of profit taking. LTI, Mindtree, Tech Mahindra, these stocks are lower. And then you have names like HUL and ONGC as well. By the way, SBI is not participating in that bank move. It's only private banks. So let's keep our eye out on it. But yeah, the bigger story is mid-caps, because it's a day of profit taking across the board, really.
Well, that's right, Surabhi. And, just a couple of stocks to pull up on your radar. In the last few minutes, you've seen Cummins. The stock was nearly a 4,000 rupee stock. It's moved to around 3,600 rupees odd. And the other one is Bajaj Housing Finance. So much of excitement, right? The stock made a high of more than 190 rupees. Currently, it's hovering around 160 rupees or thereabouts. So it's let's pull up Bajaj Housing. There was so much of excitement out there. That's today's chart. you pull up maybe a 2 or 3 week chart, from the day it's listed, the stock has seen a sharp correction from the recent peak. So maybe sometimes rushing into these names once they get listed may not be such a good thing, because if you bought at the top, then you would actually be sitting on a loss. And in fact, the stock listed, I think, at around 135 rupees or so. So it's seen a big correction from the peak that we saw out there. Could be a longer term good stock, but in the near term, it seemed to have run ahead of itself. Well, how do you position yourself, though, in the final hour of trade? Mitesh Thakkar is back with us. Mitesh, flat is not bad, and we're trading around the flat line. Your view on the index, and fill us in with a couple of your picks.
Good afternoon, Nigel. I think I would agree with that. It's a decent market. After a good rally, if you're just down 5% on the Nifty and you are still positive on the Bank Nifty, it's a good market, actually. So stay that way. I think today a lot of real estate stocks are having some kind of a breakout pattern. So I've identified Oberoi Realty as a fresh entry trade, getting past the earlier swing highs of 1900 levels. This can be now bought with a stop below 1900 for a target of around 2,000 billion. So that's one. You could have also seen Godrej Properties as well as DLF. Disclaimer: some positions are there in DLF for me, as as these stocks which are doing very well. So that's one area. The other one is metals, which has done very well. And maybe, that's an area where you would see some good action. Though I think today is quieter than yesterday. After the gains, after the move yesterday, is just consolidating today. But the momentum remains. So I recommend a buy on Vedanta with the stop below levels of 468 and target of 500.
Okay, all right, got it. Thank you very much for that. By the way, there are some very sharp moves in the mid-cap market, and we'll discuss these stocks as we go along. On the losing side, today, Easy Trip has taken a knock of almost 15% because of, this whole question mark about promoters looking to pare down their stake. So that's one sharp one. And IEX has continued to fall, another 4-5% down on IEX. We'll get you more on these stocks as we go along, with plenty of newsmakers in the market. Well, OMCs are also in focus, OMC stocks. Now, there are reports that are speculating that perhaps we could see a retail level price cut before upcoming state elections in Maharashtra. Sonal is here with more details. Sonal, I guess this buzz always comes around every time we go into an election. What is the latest and what is the word on the street?
It does, actually, and this is something which is expected again ahead of elections, the state elections, especially the states of Maharashtra, where we do see big revenues coming in for these oil companies in terms of petrol and diesel sales as well. So there are some brokerages who are expecting this. CLSA says that there has been a recent drop in crude prices, contraction in refining spreads, because of which marketing margins are at a multi-quarter high. On the back of this, there's an expectation that maybe ahead of upcoming elections in Maharashtra, there could be a cut likely soon, around 5th of October itself. That is something that they're expecting. They also believe that the government could go ahead and they talk about excise duty along with any retail fuel price cut. So they will save their own revenues there, but there could be some hit on oil marketing companies that we could see. This would bring down break-even price for diesel and petrol and make all these three stocks, that is IOC, BPCL and HPCL, vulnerable if crude prices go above that mark of $80 to $85 per barrel, because after that fall continuously, the crude oil prices have been going higher already. BofA Securities also talks about a possible price cut on the horizon. They say with retail petrol and prices remaining unchanged, spot diesel and petrol margins, they have improved substantially to 7 and 10.9 rupees per litre. They, however, continue to remain very cautious on the sector overall. They reiterate they underperform on HPCL and BPCL because of high net marketing sales. Especially they talk about HPCL that has the highest net marketing sales to refining throughput ratio. That would be impacted the most. Every 1 rupee litre cut both in diesel and petrol prices has an impact of 36% on HPCL's EPS, and for BPCL and Indian Oil it will be between 21 to 26%. So these are some of the factors they think will impact oil marketing companies if there is a price cut that would come by. Also considering that crude prices have already inched higher from those lower levels.
Okay, all right, Sonal, thanks a lot for that. So that's clearly the fear, and in fact explains why those stocks are a little under the weather. Prakash Thiman joins us. Hi Prakash, good afternoon and good to see you in. How would you approach these OMCs? That's always going to be the risk, right? You have crude oil prices bounce back up. You have state elections as well, so there could be some populism that comes in there. Your view on these three?
Good afternoon, Nigel. So I definitely feel it's precisely because of this uncertainty and this overhang on regulatory forbearance, which always, lets the market accord a very soft P multiple to these companies. I mean, you have IOC available at less than 6 times. BPCL, similar situation. In fact, BPCL is the cheapest stock in the Nifty from a P perspective. And I feel if you look at this consideration or this anticipation of a price cut, I think this happens all the time. But given the fact that crude is not something which is all very decisively on its way down, in fact, it's been fairly range bound, and it can kind of spike up if things look up. Especially, winters is a time where stocking happens, and especially in the North American market. So if that were to happen, I don't see any reason why this price cut becomes starts crystallizing. And in the absence of that, you have all these stocks available at such low valuation. BPCL particularly is very balanced. It's not skewed towards refining as IOC is or towards marketing as HPCL is. I believe if you had to take one out of all of these, I would put my money on BPCL, and it's available at very reasonable valuation, as I said earlier.
Okay, so that is the take on OMCs. Let's go back and look at some more stocks that are on the move. Actually, on a day like today, when the broader market's cooling off, I just want to take up some more names. Saregama. You can't ignore a move on Saregama, the kind of the move that we're seeing today. Volumes are also pretty large. 18% is what the stock is doing at this point in time. And the other one that's surging as we speak is Z Entertainment. This is interesting because I think a different company, that Z Entertainment did a deal, I think, with Mukta for content, some sort of a content share deal. But the stock that's obviously rising is Saregama. But interesting moves on some of these media names. Then there is Senco, which continues to shine and sparkle, 5.5% up on Senco. And one more that can be highlighted is probably HEG, 6% up on HEG as well at this point in time. So interesting mid-cap moves coming through. Nigel, HEG, anything new?
Yeah, just a view on HEG. The reason that the stock is going up is because a couple of factors. China is announcing the stimulus, right? So the hope is that the steel cycle bottoms out. There's only 5% of the Chinese producers that are making money at current prices. So that means that they either will not produce or the prices need to bounce back up. So if steel prices move up, graphite electrodes is an input for steel, right? It's used primarily for steel making. So if steel prices are going to move up and the cycle is going to turn, then graphite electrode prices that have been under pressure, well, that's going to get some base. The other factor is that the largest producer, who has 30% market share, they, in fact, Graftech, they have increased prices by close to around 20% for the new contracts. So the hope is that most of the 20% gets absorbed, and even if the worst case it doesn't get absorbed, at least it puts a base to graphite electrode prices. And as we know, the prices move up together, and prices have been declining non-stop. So now the hope is that pricing will turn around for graphite electrodes, volumes will pick up as well because steel companies will be in far better shape, and that's why these stocks are moving up. HEG, I think, in the last month or so, I think the stock has moved up roughly around 15 to around 20% odd. Prakash, you track these counters, HEG and Graphite. India, I remember, 6-7 years ago, they had a beautiful phase when they were giving margins of 60 to 70%. HEG management, always when they join me, they tell me, Nigel, those days are gone, but at least things should bottom out in the near term. What's your view on these counters?
Yes. No, absolutely right. So if this China stimulus is something which can have a long-term impact, which I'm still not sure, and I'm not ruling that out, but, the Chinese government comes up with moves which are fairly nebulous in that sense. But if you believe that globally the steel cycle is bottomed out in terms of pricing and things could only look better from here, then of course with the lag, HEG Graphite will start doing well. But at 48 times trailing, HEG is not coming cheap. I mean, it's an input and it has so much of a dependence on the underlying business. But, I go back to this whole thing that when we are looking at these kind of plays, the shovels and axes play as compared to, buying steel, you will always be more vulnerable to global demands and this thing. But I think by and large, these companies will start paying off. And the other thing you can add to this is refractories, Nigel. You know how well that business also starts doing well once steel making starts doing well. But there is still some time. So let the steel cycle start giving you a very decisive move that it's on its way up for the next 12, 18 months. and then probably HEG, and this will probably give you that 20-25% kind of a move potential. But from here on, it's close to its 52-week high. I remember looking at it sometime back, 2,700 odd was the high. And it's closer to that. So it's not, as you said, it's moved in the last 1 month in anticipation of this. I would be a bit sanguine about adding more at this point in time.
Since you mentioned refractories, what do you like from there? IFGL promised, but then it couldn't really keep up, so that stock corrected. Vesuvius has been a beautiful outperformer. I recall explaining the stock at around 1,700-1,800 rupees. I think it's around 5,500 rupees right now, and that's really made a big fight back because otherwise RHI was top of the pack.
Yeah. No, I think Vesuvius still continues to be the best quality name out there, and I remember your mid-cap mania it's been maniacal in terms of the move as well after that. But it will give you very good resilience to play the sector, and refractories is far more dependable because given the supply dynamics of this thing as compared to graphite. So I would still look at something like that and hold on. And you could add on dips. I know it looks very well priced. 56, 5,700 is not easy to digest. But in terms of valuation, forward valuation, it's still not as pricey as some of the other names. So I would look at that.
Okay, so steel, graphite electrodes, refractories. For those who are interested in playing the possibility of a rebound, a more sustained rebound, given the China stimulus. Got it, Prakash. I'll stay on some more questions for you in just a bit. Dabur is a stock under pressure. In fact, it's down almost 4-5%. UBS has actually downgraded the stock, which is an interesting note coming through. Vinny is joining in with details. Vinny, this is interesting because most people are talking about a rural recovery and how tactically, positioning is moving towards FMCG. Then why this downgrade? What is UBS saying?
Yes, UBS is highlighting that rural recovery is there. That's not a worry coming in. The worry point for them for Dabur is mainly from the real juice segment because there's a lot of increasing competition that one is seeing in the cola space. There are a lot of new launches that have come in. Let's not forget Reliance had launched Campa Cola, and that was at a price which was much lower than the real juice segment. So the juice segment of them could be under pressure going forward because of the increased competition, pricing war in the carbonated space. And real juice and the juice segment accounts for around 9-10% of their revenue. So chunk of their revenue comes in from this side. Not only for juice segment, but increased competition that they're facing in the coconut oil segment that accounts for around 2-3% of their revenue. A lot of companies like Bajaj Consumer also has entered into and forayed into this space as well. So that is an increased competition which could be factoring in and which could create some bit of a pressure on the stock going forward. Rural recovery, like you said, it's in place, and that's what even UBS is highlighting, but that is priced into the stock already. The valuations at which Dabur is trading right now is quite high. So that is why they're seeing a bit of a downside risk coming in, downgraded the stock to a neutral rating, target price of 700 rupees per share, and cut the EPS by 11% because of these risks.
Okay, got it. So a little bit of concern on the juice out there. Vinny, thanks very much for highlighting that note. Prakash, what do you think? Do you kind of find sense in this thesis? Or do you think this is a bit of an anti-consensus call and you wouldn't concur? Dabur?
Yes, I would concur to this. And I'll tell you my logic behind this. It's precisely the reason why UBS is talking about the softness anticipated going forward. First, coconut oil is just about 2.5-3% of their revenues. Okay, does it make a difference if it goes down? Competition can come in. The market size is so massive. The segmentation is very different. You always had Marico as the leader, and still Dabur ventured into this. It's not a flagship product of sorts. The other thing is juices has got nothing to do with your consumption on colas and carbonated drinks. They have a standalone kind of a application and usability. So I think this is a bit overdone. In fact, the innovation that Dabur has done in the juice category is only helped them increase market share against a lot of other competition there. And look where it is traded, 58, 59 times trailing, about 42 forward. It's done well in the last 3 months. It's done about 20% in anticipation of improvement in volumes. I believe post-monsoon, the volumes, and that's what the report also says, that the volumes will pick up, market share will strengthen. Some of these competitive intensity or issues could probably impact it, but not so much to downgrade it so drastically. I still feel there is an upside, and their target also is 700, which is good. They're talking about at least about a 15-18% kind of an upside. I believe it could do much better. And remember, Dabur also has some other businesses in Asia, which in the Asian subcontinent, which also do well. So not to worry about it. It's a company that continuously innovates on products, and the price points are fairly robust. So I would still be positive on it.
Okay, so there's still ample juice in Dabur, the stock. I guess that's what Prakash is essentially saying.
I have a more fundamental and very basic question.
Which is?
What's the oil best for one's hair?
Between the almond and the Navratan tail and the parachutes, yeah, that's a very deep question, Prashant.
Coming from a Keralite, it's an odd question.
I know. Why do you think I've grown up? But now at this stage of my life, I go to people tell me, well, it's really bad it's really bad. Don't put it. So it's one of those existential questions. No right answer. You ask 10 people, you get 10 opinions. You have a favorite, Prakash?
No, you can look at my hair and make out that I don't really use much of oil. So.
But Prakash, you're in Paris, right?
Sorry?
You're still in Paris? You're still in Paris?
Yes. Just a couple of days more, Nigel, yes.
Well, lucky guy.
Don't worry.
Yeah, I don't think he's thinking of coconut oil right now. But okay, Prakash, finally, before we let you go, some interesting stocks. So take your pick on any one. I was just highlighting them. So there's Ease My Trip, all kinds of things happening with the company. They're trying all kinds of new business strategies. They want to do buses. They want to become strategic incubators. And now the promoter is probably going to sell stock. So that's one. And the other, these media stocks. That was interesting. Today's move on Z, on Saregama. Any thoughts on any one of them?
So I don't know what's triggered the Z move, because the Mukta Arts content library is fairly well priced, as in it's been discovered. Mukta itself been a listed company for so long, so we know exactly where the value stands. So I think it's just some excuse to look at buying into Z if there is some sort of a special situation emerging sometime later. But Ease My Trip is the company where the promoters have been just exiting. I mean, it's been priced too high. If you really see the traction, profitability is still some time away, and for them to not focus on profitability within the core ticketing business and go into other things itself is a question mark. So I think the market is wise enough to punish it. There are far better names within that space which could consolidate, and like look at Yatra. I mean, there's lots of special situation that's happened. The Nasdaq thing is off. You probably have an acquisition from the Globe travel side, which would tie in very well. So these are small businesses that have the right to win in terms of market share and business scaling up. So I would look at that, but Ease My Trip is absolutely an avoid.
Okay, all right, Prakash. Great having you on the show. As always, you enjoy the rest of your day, and we'll connect again soon. Right now, need to take a very quick break. On the other side, Nikhil Ranka of Nuvama Asset Management will join in with some market thoughts.
Okay, welcome back. We've got the market, which is, 7 points lower. 25,940 is where we are at. Nikhil Ranka is with us, Chief Investment Officer of Equity Alternates at Nuvama. Nikhil, great to have you back on the program. Thank you very much for your time. You're cautious. Let's put it straight up. And for a variety of reasons, from F&O positioning to the new thing, which is maybe China looking a little better at the margin. And I think your view is that you'd watch foreign flows very closely over the next couple of weeks or so, whether all the stimulus, etc., is attractive enough to get foreigners to buy that market. Is this a very near-term view, Nikhil, or you think overall for a while the market needs to consolidate?
So good afternoon, Prashant, and thanks for having me on the show. If you look at near term, what has clearly happened is if you look at the weightage of India and China in the MSCI Emerging Market Index, both India and China have been close to 20% weightage. But if you look at the trailing 12-month FII inflows into both the markets, China has seen outflows of $92 billion, whereas India has seen inflows of close to $17 billion. So a lot of fund managers, the emerging market fund managers, were running an underweight position on the Chinese market, and that has played out well for them. Now with the Chinese government giving stimulus, acknowledging that the market needs some sort of support. Yesterday we saw Chinese markets have rallied 4%. They have moved up again today, and valuations are less than 10 times CY25 for the Chinese markets. So my sense is if there's more strength in the Chinese market, a lot of the foreign portfolio managers will be forced to increase allocation to Chinese market. And that would mean that India could have lesser share of foreign inflows as we go forward. If you look at it, in terms of positioning also, the last 1,000 points move on Nifty that we have seen, there has been almost close to 30,000 crores of buying on the F&O side and another 30,000 crores of cash market inflows that we have seen in the FIs. And yesterday was the first day where we had a large sell figure from FIs after a long time. So yeah, we will have to watch this situation very closely. And the second point is, even by historical standards, if you now look at the valuations of Indian markets, we are now close to 21 times FY26 earnings, whereas the median multiple has been somewhere close to 19.5 times. So we are a bit therefore cautious on the near-term outlook, and we will want to watch the FI flows in the markets for the next fortnight very carefully.
Okay, so yeah, take your point. Let's see what happens to those FPI numbers, because we haven't had very consistent flows come into India. Anyway, let's see if that number starts getting negative or not. But Nikhil, to sort of talk about our market on its own merit, I think the other point you're making is on earnings, and that's a point one can fully appreciate. Q2 is the litmus test, right? Q1 we said there's election, and there are other issues and impediments because of which you could ignore a couple of misses here and there. What is the Q2 expectation you have? And in terms of any sectoral preferences, if you have, do share that with us.
So Surabhi, if you look at it, for the full year of FY25, we are building in somewhere close to 13-14% earnings growth. If you look at the Q1 which just went by, there was an 8% earnings growth for Nifty 50 companies at an aggregate level. Now, clearly, the commentary from most of the management was that there were disruptions because of elections and heat waves, and that things will start normalizing from Q2 onwards. And Q2 also will have some impact of the festival season. So if Q2 doesn't see a 12 to 15% earnings growth YOY, then clearly there is a risk that the street will have to start downgrading consensus estimates for FY25. And that could have some sort of ripple effect, because one, you are already trading above mean valuations on indices, positioning is at all-time high levels. And on top of that, if there is some sort of earnings disappointment, then clearly we feel that the markets can have some small pullback from here on levels. In terms of sectoral preference, the last time when we talked about, we had said that banking is one of the sectors that we are positive. Bank Nifty at that point was closer to 51,200, 51,300 levels. We've seen a 6-7% up move in most large cap banks from there on. And we still feel that there's another 10 to 12% upside that one can make in these names over a 10 to 12 month horizon. In terms of cautiousness, we've gone a bit cautious on the IT names. So clearly, if you look at it, the commentary from most large IT players, if you look at it, they are not signaling a significant demand revival from where we were in Q1. If you see the deal will announcements also from most of the large Indian players, we haven't seen much of large deal announcements from them. Typically Q3, Q4 are seasonally weak quarters. If you look at the commentary from Accenture a few days back, they have deferred pay hikes for 6 months. So my sense is valuations, we are trading probably one standard deviation above mean. And if earnings trajectory or earnings momentum does not follow for IT names, there could be some sort of selling in those names. In terms of geography, Europe specifically is one of the geography where most companies are saying that they are seeing slowdown. And the second part is if you look at BFSI as a whole is close to 40% of the overall earnings for IT companies. And there, given that there's a rate cut cycle that's happening, the NIMs could get a bit compressed for large banking names in the US. So yeah, we have some sort of cautiousness on IT names going forward.
All right. Hi, Nikhil. Good afternoon and good to see you, Ben. Since you briefly spoke about China, and we have been discussing that the play on China could be metals, but you're talking about the chemical space as well. Do you think that could be the dark horse from here on?
Yeah, so what has happened, Nigel, is over the last 4 to 6 quarters, most of the specialty chemical companies in China, if you look at it, they had set up large-scale capacity and demand was clearly an issue because economic growth had slowed down. And consequently, here also we've seen that over the last 4-6 quarters, chemical companies have disappointed. Going forward, the commentary from most of the companies was that prices at least seem to have bottomed out. And so therefore, because markets are typically 3 to 6 months ahead in terms of pricing earnings recovery, if we see data points from China stabilizing, then that's one sector where positioning also is low. And if we get that green shoots of recovery, then specialty chemicals can start doing pretty well from here on. Is what my view is, because they have not participated till now in the rally that has happened in the markets in a big way.
Yeah, right. And you briefly mentioned that, financials are something, banks financials, something that you spoke to us about the last time, and it's done 6%. You believe that it could do well from here on as well. Which side are you leaning to? Do you think the private sector banks now are at a better place in the PSUs?
So if you look at it, private sector banks have moved, honestly speaking, more than what PSU banks have moved. And so tactically, given that most PSU names are today trading closer to book value, my sense is there can be some sort of catch-up that can happen on the PSU side now. Private banks have already moved 7-8%. And then the street will clearly watch out for what is the Q2 update from most of the companies. In the first week of October, we will have earnings update from most large private banks as well as some of the PSU banks, where we will get to see what sort of loan growth they are reporting. And so my sense is that there is some sort of tactical play that is still left on the PSU bank side. 8-10% up move is something that we feel can come even on that space.
All right, Nikhil, by the way, these are broad sectoral kind of trades, etc. Are you finding enough to do in terms of idiosyncratic kind of moves? Single stock could be a situational thing, or you think those are also they're being very, very, very efficiently priced, getting harder in that sense?
So clearly, Prashant, things are becoming difficult. It's getting difficult to find value in the markets. In terms of specific sectors, something like, the largest power generation company, there's announcement of the green energy IPO. And, this could be 8-10% up moves that one could tactically play in these names. We've seen that happening with Bajaj Finance also. When Bajaj Finance Housing got announced, the stock listed at almost close to 5 times price to book. And so there was that tactical rally that happened in Bajaj Finance as well. So something of that sort where, so value unlocking is happening in subsidiaries, those sort of trades definitely can pan out because the market is short on ideas. And therefore, wherever they see that there's 8 to 10% upside that can be made, people very quickly latch onto it.
All right, we'll leave it there. Nikhil, great to speak with you. Thank you very much for coming on, and thanks for that view. Quite interesting. Now, we're all talking about how capital market plays have done phenomenally well, right? This is the prime example of how well capital markets have done. The largest online broking company, Zerodha, announced FY24 earnings. CEO Nitin Kamath has said, and I quote, they're bracing for a big revenue hit, end of quote, amid upcoming regulatory changes. The folks who run it are broadly cautious. I mean, Nitin, for example, regularly warns his Twitter audience that things are not going to be as great as they have been. But 24 has been fantastic. Vamakshi is here with details. Vamakshi.
Well, absolutely. FY24 was a fantastic year for Zerodha. They witnessed an uptick of almost 21% in their revenues, but the net profits were up nearly 62%. But going forward, the management appears quite cautious on their growth outlook as well as their growth trajectory going forward. Nitin Kamath, who's Zerodha CEO and co-founder, said that despite the strong performance that you saw in the past year, the company might be seeing a hit in its financials due to various regulatory changes from this year onwards. Many risks were around the corner, he said, and they all seem to be materializing simultaneously, and they're already seeing revenue and profit plateauing, and they're bracing for a big revenue hit in the coming year. They've also gone ahead and quantified the impact from various regulatory risks. SEBI's True to Label circular, which will come into effect from October 1st, they're expecting a 10% revenue dip on account of this. SEBI's consultation paper on index derivatives, if it does materialize, could see an impact of almost 30 to 50% on its revenue. Additionally, increase in STT is expected to come through from 1st of October, and the impact on options trading is expected to be minimal, but it is expected to be quite significant on the futures trading. The threshold for collecting annual maintenance charges has been raised to 10 lakh rupees as compared to 4 lakh rupees now, and additionally the removal of opening account fee could also lead to a meaningful drop in the revenue, is what the company has highlighted. Along with that, the referral program is now only limited to authorized personnel, so therefore customer onboarding through the referral program, that will come to a halt if you're not an authorized personnel, and resultantly this could impact growth going forward. So this does have a negative read-through for not only Zerodha but for some other brokerages as well, which includes Angel One and 5 Paisa Capital. But nevertheless, the company is also undertaking several diversification measures in order to mitigate these regulatory risks. But given those factors, we do have Zerodha in focus, and along with it, Angel One and 5 Paisa Capital also down in trade.
Thanks a lot for that, Vamakshi. By the way, take a look at the markets. There seems to be an element of expiry that's playing out, weekly expiry that is. The Nifty Bank has now moved to the high point of the day. We're up close to around 150 points. A couple of other larger cap names as well could have moved, in step as well. So maybe you pull up Reliance Industries, ITC. It's the Nifty Bank. The Nifty Bank has moved up 150 points, 54,250. That's the crucial mark out there. ITC, let's see what ITC is doing. I think a couple of banking names as well, like Axis Bank, have put on some weight in the last few minutes. But let's focus on power stocks. Power grid continues to climb up on the finalization of the new National Electricity Plan. Vivek joins us to fill us in with more details. Vivek?
Well, that's right. The new National Electricity Plan from 2023 to 2032 has been finalized. The total capex, or the total cost of the plan, is at 9.15 lakh crore. This plan is aimed at meeting a peak demand of close to 458 gigawatt by 2032. Remember, the earlier NEP was from 2017 to 2022. What are the key targets? Number one, to meet increasing electricity demand, like we just mentioned, and also to facilitate renewable energy integration and green hydrogen loads into the bid. Now, when you're talking about the new plan targets, what is it that they have? They intend to expand the network expansion as far as the transmission capacity is concerned. Also, they will be adding 9 new lines. These are HVDC lines. And along with that, interregional transfer capacity will be increased from 119 gigawatt to 168 gigawatt. Along with that, a transmission network of close to 335 gigawatt is being planned. Who are the key beneficiaries? Number one will be Power Grid. Every time there is transmission capex that is outlined, Power Grid stands to benefit. Along with that, a whole host of other players in the system that you can see on your screen also will will stand to benefit. Goldman Sachs has written a report on this particular development. They believe that given its large balance sheet, low cost of debt that the company has access to, Power Grid will be a key beneficiary of the latest NEP guidelines that have come in.
Okay, all right. Explains the kind of enthusiasm that surrounds power stocks, of course, throughout the entire value chain. Thank you for that, Vivek. We'll take a break on that note, come back on the other side, and we will have, of course, all the dealing room chatter coming up with Nimesh, and then some final trading calls for the day coming up with Mitesh as well.
Welcome back. It's not just the banks, some of the financials as well are moving up. Bajaj Finserv has moved to the high point of the day. Good move is what we're seeing out there. Mahindra & Mahindra was quiet for most of the trading session, but that's got a leg up as well, which explains why now the Nifty is above the 26,000 odd mark. The intraday chart of these stocks should come up for you. Even the FMCG index actually has moved up. Nestle is seeing a bit of a spurt in the last few minutes. Nimesh joins us to help us out with what he's picking up in D-Street chatter. Nimesh?
And as you know, depth consolidation, so to speak. But again, it's very selective. With, there is buying happening within the PSUs as well. So again, the flows today are muted compared to what we've been seeing in the last few days. But whatever the flows are, seems to be largely in the large cap names and some select PSU stocks. So that's the overall texture in terms of flows. I guess what explains the move in Nifty in the last 30 minutes of trade is because I understand there is a small MOC basket buying as well in select Nifty names in the last 30 minutes. So maybe that's the reason why you're seeing an uptake in the Nifty as well. But the broader market tends to underperform, and that's been the trend for the last couple of days. And there's a feedback as well that maybe the shift is happening towards large caps from the broader market stocks. So that trend continues. But again, today for a change, the flows are slightly muted and very limited to a few Nifty names and some PSU stocks.
Yeah, but this last sort of 15-minute uplift, it's making the Nifty look nice, right? We've got 2,600 on the screen, at least for now. Let's see if we can close above that. What about individual stocks, Nimesh? What's the buzz today?
Well, so I normally start with a block deal. So again, today was a large block in KPR Mills, nearly 1 crore shares, close to 3.5% equity call change hands. Again, looks like the promoter entity was a seller in today's block and a domestic mutual fund was a buyer. So disclosures would be quite interesting. The share actually has recovered from the lows after the large block. The second name is Dabur. Under pressure today, there are sell flows, is what I understand, at larger FI desk. And additionally, there was a UBS downgrade as well. While they've raised the target price, the call was to downgrade purely on back of risk on earnings going forward. The third name is Tata Steel. We've seen a bit of buying back in the metal stocks, and Tata Steel stands out. Yesterday there was a large delivery-based buying, and even today I understand there are very strong buy flows. So it looks like overall towards metals there is a bit of interest back from larger FIs, and so is the case with Tata Steel. And the last is Equinox India, the erstwhile India will real estate. After a long time, looks like some bit of bid interest is back. There are very strong buy flows and some bid interest as well at leading FI desk in Equinox India.
All right, Nimesh, thank you very much for that. So lots of blocks, lots of action. I mean, it's a hot market for all kinds of things. And Nimesh, of course, getting us a slice of what to expect. We'll keep an eye out on those names. Well, as I said, the blocks are going to continue. And Vivek is now joining us. And what he's given to understand is that 5-star finance may see a block 20%. I mean, so there's got to be a private equity player looking for an exit. I mean, that may happen soon. Vivek, tell us more.
Well, that's right. Just as you mentioned, what we are picking up from our sources is the fact that in 5-star finance, a clutch of PE investors, largely led by, Peak 15, this is the earlier Sequoia Capital. Also, remember, Sequoia Capital also holds stake in the company. They are leading, the charge as far as, pairing stake in the company. A whole host of almost 5 private equity players hold a little over 25% stake in the company. We understand that very soon, there could be a block deal that could be launched where there could be a certain amount of stake. We understand close to 20% of the total equity could change hands in this particular block deal. Close to $500 million would be the size of the block deal that we are given to understand. We reached out, of course, to P15. P15 declined to comment on this particular story. But, just for reference, have a look at the shareholding pattern as far as the private equity investors are concerned. Sequoia Capital, almost 3.5% stake. Sirius, that is KKR, almost 6% stake. Peak 15 Partners, ex-Sequoia, they have close to 3.77% stake. TPG Asia 9.28 and Norwich Venture Partners close to 5.16. We understand a whole clutch of them will be joining hands and will be trimming stake. 20% equity of the total company could change hands quite soon.
Okay, all right. So the season of big blocks perhaps is going to continue. This could be a new name on the radar. Thank you for that, Vivek. Let's move on and get you more market perspective. And this is a CNBC-TV18 exclusive. Manish Chakhani of Enam Holdings believes that valuations in the small and mid-cap space have gone berserk and that investors must avoid having too much of their investments in small cap stocks. He also says that investors must not fall prey to FOMO. Listen in.
The valuations are berserk over there. I mean, again, great companies. But, and again, I usually don't talk about stocks, but just to put some sense. And again, don't get me wrong, I'm not disputing valuations or anything, but just to give the Infosys example. Let's say our favorite stock this year was, say, Zomato. It's a $30 billion market cap. Let's say we expect the market normally to give you a 15% CAGR for 10 years, which is 4 times. So it should be a $120 billion market cap in 10 years. Let's say it's a 30p by then because it'll be a fairly large company. So it needs a $4 billion PAT, profit after tax. To get to a $4 billion PAT, just for context, today, TCS with 6 lakh employees makes $6 billion. So, is this possible? How will they do it? Will they add more lines? I mean, Amazons of the world have done it. They started somewhere and they ended elsewhere. But if you're taking that bet, your time horizon has to be that, or your return expectation has to be that much lower. And that's the sort of stuff going on over here.
Got that. I want to talk about leadership in this bull market as well. And we'll get back to what to do and advice for investors a little later. So PSUs, capital goods, real estate, infrastructure, that's essentially been the leader of the bull market. But people, defense, etc., right? that part, it looks like we're starting to rotate. People are starting to rotate out of that.
Which is inevitable.
Inevitable. You think that's done, or is just like a pause and refresh case here?
Again, in terms of market cycles, when you see the leaders of every cycle, then they go to sleep for a decade. So the leadership of 2000 to 2007, which you were earlier alluding to, was indeed commodities and infrastructure, power, real estate.
Right.
And then the excesses which happened in that period made them complete pariahs. So if 4 years ago, we were on a show and Ramesh and I remember we would talk about PSUs and everyone was like sniggering, like, what's wrong with these chaps? But because the correction had been so steep that it's eventually an investor's job is about valuation. Like I said, the greatest Infosys may not give you the return, and the what so-called poorest PSU may give you the best return. So it was a mean reversion trade which happened, and of course all the right policy things happened for infrastructure and defense and railways and so on. So you go from being what I call terrible to bad is a rate of change, but you went from terrible to being good. So that rate of change is so dramatic that's what the markets have discounted.
And now maybe to great.
And now you're imagining it to be great. Some of them may make it, but most of them won't. So I would be very, very cautious in those kinds of places. And typically these are not high return areas. By definition, if you make 25% IRR in an infrastructure business, the cost to the consumer, which is the average public, is going to be too high. So your money made is really on leverage, and therefore the return on equity comes in that business. So. And people are shy of doing leverage after, again, the last cycle. And the flip of it, to just complete, the leadership of the last cycle was all the high-quality businesses in the last decade, which were all getting re-rated. Asian Paints, Page Industries, Kotak Bank,
consumers, retail.
and including banks, because banks became 30% of the index. And you're seeing that getting corrected, that Kotak, HDFC haven't performed for the last 5 years. Again, great companies. But it's the excess of that which is now getting reverted back. And now they've become so hated that when will HDFC move? And there are memes on HDFC doing the round the way it was for ITC. And then you saw the way when ITC moved, it just doubled before anyone realized it.
You think...
so things like that tend to happen. I can't forecast what will happen in...
But you're very bullish on the financialization theme.
I am very much.
And financials, right? I mean, advice for investors who are watching, Manish. I mean, because in many ways you're saying that a lot has happened. So one must be cognizant of that when you make fresh purchases.
So what happens, and again, it's something I've experienced in the past, so maybe that would be of benefit to investors, is, look, the market tends to be a 75% large cap, 20% mid cap, 5% small cap type market. And that's the distribution. Few of these will graduate to box 2 and few of these will graduate to box 1. So your normal portfolio allocation tended to be a 80-20 mix, that we would keep 80% large cap for safety and 20% to give you the alpha, to give you much better. Given that we guys also came back from, we built a lot of our wealth on the small and mid caps only. But when you start doing that, you realize your portfolio mix tilts because those companies become reverse. The small and mid become 80% of the portfolio and the large become 20. And whenever something goes wrong, like you had crises in 2008, 2018 even, for no fathomable reason, they can tend to fall 60 to 80%. And that is very, very damaging for the portfolio. And that is what really scares you out of the market. Like, again, the same famous example of Infosys. It went from 16,000 to 2,700, which is like almost more than an 80% fall in a high-quality company. Because when that happens, liquidity, you'll be surprised, it just vanishes in the stock and you just can't get out. And what you think my portfolio value is, whatever, 100 rupees, it looks like it's less than 50 suddenly. So if you can just keep tilting your portfolio, that if your asset allocation is okay, that you may have maybe 50, 60, 70% of your money in equities. It's very easy right now to feel you're making so much money, get out of banks, liquidity or whatever, put it all in the market. If you're not prepared for a downturn in the market, then you'll get scared out. So asset allocation to equities, number one. Within that, what is your mix in your portfolio? Be very cognizant. Too much concentration in a small or mid category or too much concentration in one sector. Again, for example, the parallel of TMT in the 2000s. If TMT became 50-60% of your allocation and that fell by 50-60%, where were you? So just be cognizant of portfolio balances. I'm not suggesting this is better or that is better, but just do what's right for you and what stage of life you are at. So I'm finding people who are 60, 70. I have a cousin who's 74 years old in another city, and she's calling up and she wants to buy small caps. She wants to buy like the most the three most powerful, high volume stocks in India nowadays with 60 lakh shareholders, or is it 60 lakh or 60 million? I don't know. Yes Bank, Idea, and Suzlon. I mean, maybe it's great companies and they have a view on it, but I mean, is it the right stock for you? First, you think about that. People will call up and if they'll ask me, should I buy a bank? And if I end up saying ICICI or HDFC, they're like, but this bank goes up every week. Again, nothing wrong with it. But is that right for you?
I think
so just think of allocation in your portfolio and what you're doing.
And the other point I think which you made before as well, riding existing winners is one thing.
Yeah,
going into
that's
new
absolutely
things,
right. So when you're in the middle of a cycle, most horses are going to run. Don't be impatient if in this cycle, this horse handles another. For example, if let's say financials haven't run and you feel, oh my God, defense and railway is running, and you leave this and you come to this horse and this horse is already run and it's ready for a down drift or a sideways move, and you've jumped here and you know less about this than you knew about that, it's going to be damaging again if something wrong happens over there. So I think just stay away from what I call FOMO. This is not a FOMO moment in life. Don't get greedy. Returns have been extraordinary and there's no reason India won't. I still think 90% of our wealth lies ahead of us in the next 20 years.
All right. Well, that's very optimistic sounding, Manish Chokhani, but also a word of caution. But look at the market, which is zoomed and how. I mean, the move, I'll tell you, started at this is essentially the definition of a 3 p.m. move, because the move started at 3 o'clock. With the Nifty was at 24,924 and we are at 26,015, which means almost 90 points from exactly 3 o'clock. So that is the extent of the sharp surge that we've seen on the market. And what has led this? I mean, if you can have Axis intraday up, HDFC Bank intraday up, Power Grid and NTPC. These basically are the four names. And actually, you should put up Reliance as well. Axis on your screen, HDFC Bank, Power Grid, which should come up, NTPC and RIL, and actually ICICI Bank as well. I think this is the bulk of what has led to this very, very sharp surge starting 3 o'clock. The bank Nifty itself has not really done very much. I mean, the Nifty Bank has not moved at all. I mean, it's not nothing. So banks were doing much better earlier on as well, before 3 o'clock as well. It's just that I think non-banks have piled on. Power Grid, NTPC, Reliance Industries, Bharti, M&M, because the big private bank Trioca, that was doing well even earlier. Surabhi.
Also, Prashant, some of the stocks that were underperforming for the better part of the day, they've either cut their losses or they've actually started moving to the positive side. Lever would be one such case in point. Infosys, I mean, IT has been a non-performer today, really. But even Infosys has moved from the lows. That's ITC. Let's look at Lever. And the sharp move on both Infosys and Lever. Both are big stocks, big heavyweights, and they've actually helped the market move higher. In fact, some other names include the likes of Nestle. A lot of these consumer stocks, they didn't have such a great morning, but now they're all off their lows, and that's sort of helped matters to quite an extent. And aside of that, of course, there are names like Mahindra & Mahindra, Reddy's, Cipla. By the way, pharma has had a pretty decent session today. Some of the large cap frontline pharma names, Dr. Reddy's, Cipla. These are names on the positive side of the screen. Even now, for that matter, the mid-cap index, from the time we started the show at 2:30, it's kind of reduced its losses. It's still negative, the mid-cap index, but the cut is about 0.6% right now. So a bit of a bounce on mid-caps as well, though the advanced decline ratio is still low. But yeah, on the large cap screen, it is 26,000. We have about 4 minutes to go, and we need to see if we can get that close, the adjusted close, whether that indeed can be above the 26,000 mark or not. The problem area for the market continues to be one which is State Bank of India. All of the bank Nifty has moved. A lot of the constituents have moved higher. We've been discussing HDFC Bank, ICICI Bank and the likes, but SBI, no such luck. Even in this last move, SBI is flat. It's simply not participated. So that's a bit of an Achilles heel for the market, so to speak.
Absolutely. And let's get in Mitesh Thakur, who's with us with some a view on the trading that's going on in the sharp surge. Mitesh, your thoughts?
So I think possibly some adjustment related expiry related adjustment, but broadly, Prashant, the market remains positively biased, and I would have hoped for a slightly bigger dip to buy into, because then the entry would have been very good. Today we got a low of 25,870, and I've talked about 25,870, 880 as the buying zone. It just kind of touched and ran away from there. But I think that's the buying area. 25,800, 830 zone, as long as that's holding, I think the immediate that should be the immediate stopper step, as well as that will help you ride the trend on the upside. So we keep maintaining a positive bias. Tata Power is something which I can recommend as a BDSC trade also. Keep a stop here of 460, 3.5 for targets of 477, 480 for tomorrow.
Okay, all right, Mitesh, thanks very much. We'll see you with the market again tomorrow. Thank you very much for joining in and taking us through the close today. As we're winding down, let's look at some mid-cap trades as well, and then we'll be heading to the close. Today's, while mid-caps have lost, there are a fair amount of gainers on the screen as well. Some stocks that stand out include, like we've been pointing out, in HEG, Senco. Look at Johnson's Hitachi, about 9% up on Johnson's Hitachi now. Some of the names like GET&D, Tata Communications on the industrial side, these are stocks that have actually done fairly okay for themselves. And if you talk about the newsmakers of the day, then let's look at Delta Corp. Remember that was a big newsmaker in the morning with the demerger of the real estate business, 2.5% up over there. Card trade, which has seen recent blocks and marquee investors going out, but then big domestic investors also coming in, another 3.5% up on that stock. The slam dunk comes in on Easy Trip, down 15%. Dabur is down 4% on that UBS downgrade and some concerns coming through. So those are the major losers. And if I talk about, again, names beyond the Nifty right now, PB Fintech has lost quite a bit, 6% down. Devyani International has lost about 4%. And IEX has continued to struggle. Second day running, IEX is down about 4%. But really, large caps stealing the thunder today, Prashant.
Well, absolutely. And as you said, power has been a constant theme, as you highlighted the names like NTPC, Power Grid, etc. Technology, IT has been the weak link, and that index will end down 0.6%, as you can see. I don't know if you can pull up we can have the Nifty heat map. When we started at 9:15 in the morning, 30 stocks were lower and about 20 were higher. I'm not sure what the sort of picture is now. I'll just quickly run you through the broader market and what really happened. I'll start with what was down. Ease My Trip, sort of a big fall there. IEX was down sharply. Policy Bazaar was down significantly today. Dabur, of course, we've been highlighting. Winnie's been getting us the details. You had, for example, AstraZeneca. Same time yesterday we were talking about that 15% pop. Guess what? It's given up some of those gains today. That's AstraZeneca. SBFC has spent the last 2 days giving up, parts of those 20% rally that we saw on the stock on Monday. So I think it gave up 6-7% yesterday, another 5% today. Zensar Tech, Newland Laboratories, Tribhuvan Zaveri, TBZ, of course, has also done very well, along with this entire jewelry stock rally that we saw over the last fortnight or so. On the upside, just a few names. I'll start with another jeweler, but on the gaining side, Senco did very well today. Power, as Surabhi's been pointing out, GET&D is a big winner. Z, I think again, Surabhi pointed out earlier. There's eClerx, which did very well. Tata Communications, Reliance Power, and PGEL, that's PG Electroplast, an EMS company. So these are some of the biggest volume-led gainers in terms of the session today. I think by the end of it, if I just take a look at what the advanced decline was, it was negative, but nowhere close to what it was looking, how bad it was looking mid-afternoon. 1,600 stocks down, about 1,150, 1,160 stocks in the green. That was the day. We end with about a 70-odd point pop thanks to that 3 p.m. move that we saw earlier. We'll take your leave on this edition of Closing Bell. Thank you very much, but do stay with us because Surabhi and I will take you through Markets Forward, which comes up after a quick break.
Thanks for tuning in to CNBC-TV18, and for more news and updates, follow us on all the social media platforms.